Hello, everyone. Hi, everyone. This is T.U.B Investing, and as you can see on the screen right now, I am actually doing some sort of channel restart. Okay, I've stopped actually doing any YouTube videos for a very long time, and now I thought I want to come back to the YouTube scene and then do some sharing on what I think I like to do, right? So, just why am I restarting, right? I want to do what I like and provide what I think I'm good at, right? I personally like to analyze companies. So something about this channel right now, what I intend to do is to, showcase what the market is missing out from all these noises and negativity all around the market, right? And to be honest, I would like to look at small and micro cap. So this is what I want to do. I want to analyze small and micro cap. There are companies too, but there's not a lot of good information out there, right? There's some sort of wrong perception on this small micro cap companies perceived at higher risk. I mean, it's if you look from perspective, we talk about big company versus small company. So there's definitely a risk in smaller companies because after all, they are smaller, right? But every big company was a smaller company previously, right? And and then there's also the volatility, the illiquidity among the smaller caps and micro caps. But that also makes it since its volatility is higher, right? This also means that they can actually go up faster and much higher percentage in that sense, right? So if you invest in a good small micro cap, why not, right? If you can find one, by all means, we should invest in it, right? And obviously, if you're a smaller company, it's easier to analyze and as usual, more reactive to big changes, right? So that's some of the reason why I want to restart this channel and then relook at what I like to provide, what I like to do, right? So just having another channel out here to showcase how I analyze companies. So maybe hopefully that could give you guys more ideas of what to look out for in terms of small and micro caps. I have also a Telegram group, so you can join them for more frequent updates. I'm not going to link them in my profile. You can easily find them in my blog actually. So if you want to join, you can join. I'm on Twitter as well, T.U.B Investing on Twitter. I have my blog, T.U.B Investing blog, and my Facebook page. I will link the blog and the Twitter below. Follow me there as well. Thank you. So just a reminder of what I want to do, and everything here is going to be analyzed of companies. It's actually a reminder for myself, right? On why I selected this company. And most of them at the start is probably company that I invested in. Okay. So I'm going to review this company accordingly to how we understand them, what's their competitive edge, the competition around them, fundamentals, financials, ratios, catalysts, and risks, right? I also hopefully I can eventually have some interviews with companies of fellow investors, my friends especially. And I may also do some Singapore companies listed firm analyst, right? Why not, right? Since I had some videos on Singapore stocks previously. So, giving you guys an alternative out there as well. So, with that, right, I would like to start with a series of reviewing 10 and small micro cap, right? That means basically company with less than 2 billion market cap. And as you can see, there's a ticker here, and there's the 10 companies here. Most of them are invested in. There are 8 companies that are invested in it. And most of them are in small caps category. There's a few micro cap that I invested in. As well as there are two that one I wasn't invested in is Movado, sorry, and Sirens, which I was previously invested in. So there are small caps as well. Hopefully I can get these 10 companies up every week, one company on the channel, or if I have more time, 2 companies in a week. So it can bring more get this channel up and going, and hopefully I can get more subscribers, more likes to the video as well. And let's go ahead with the first company, right? The first company is what I invested for a long time. It's called Digital Turbine. The ticker symbol is APPS. And recently they changed their logo. Not that I like this logo, but it's fine. let's take a look. So before I start, right, I have the usual disclaimer. I'm not a financial advisor. Please subscribe. Please like the video. Please click on the notification bell if you are interested. Moving on, so let's look at my initial take, right? So I invested in this position. As I shown previously, the first 8 company I probably invested in it. I've actually written over 17 articles on it on my blog and other platforms. And I was expecting, I would say that I was expecting a 10x potential previously, or even now I'm still expecting a 10x, especially now that it's 1.9 billion instead of 5 billion, right? It's easier to hit the 10x potential at this stage. Over the past 1 year, as you can see on the screen right now, is this it has actually fallen 72%. But interestingly, over the last 5 days, it has went up 63%. This is as of, let's just say today is as of 15th of November, Singapore timing is 10 p.m. If you are watching from US, probably is early morning, around 9 or 10 a.m., right? Anyway, so on myself, I'm down 48% on this company itself. As usual, the market cap is 1.9 billion. So maybe let me show you the 17 articles that I have written in, right? So firstly, this is my blog, right? Tubinvesting.com. So you can see 10x potential series. Yep, I invested for a long time. I started writing since 27 January 2021. It was a I started my first post on it, and yeah, I've written 17 posts on it since then. And with that, let's see what. So as you can see, right, so for the first pointer of understanding business, please, if you want to understand more, you can watch my previous video. You can read my blogs as well. My previous video is on my channel, Digital Turbine Apps Chit Chat Session, right? You can take a look at that. I have actually explained more about it in that slide, in that video. You can listen at 1.75 times the speed. I mean, you still get it. So generally, maybe just to tell you how apps, Digital Turbine earns revenue itself is through distribution of apps via preload, advertising, via various partners, OEMs or telco companies, right? Or they are also doing right now advertising through mobile games, right? In that sense, the idea behind their growth driver is having more partners, more codes on devices. In that sense, it's more partners, more products within the code. Is basically more products for the partners, as well as eventually getting more advertising, more inventory for advertising, right? That's how they're trying to get the cycle going, right? So in future, there's actually, if I'm going through, I'll go through the transcript later, and you can see all their I would say the tailwinds of the company itself. So let's get to the next point, because I have a lot of things to go through. So if you want to know more about business, please just watch my previous video. And with that, I just look at the competitive edge, right? So there's actually this competitive edge called mode around the device. Let me go through my Seeking Alpha article where I've actually talked about it previously, right? So this is the article. If you like to, please look through, right? So it was written April 11, 2022. I've written specifically here, there's a mode around device, because once the device here is probably the smartphone, has the Ignite on device platform installed on it, they will eventually Digital Turbine will have the data on it, and basically you see here, once activated, right, the Digital Turbine will have their own identification on the device. As a result, there will be more within this built around the device, as well as the capacity to tap into the device first party data, right? And in one of the conference transcript says the number one is our software the CEO Bilson emphasized the mode as well. He stated number one is our software directly on the device, and once we get our software into the device, whether it's a Verizon device, a Samsung device, an AT&T device, and whatever you have, there's no competition around that device, right? And as many of us have said, data is the new oil, right? So So I will say that this mode around the device is a very important factor. They have about 1 billion, I mean almost reaching, is either they are almost reaching or they are going to reach or they are around reaching 1 billion, if I'm not 850K kind of devices right now, with Ignite platforms. Every quarter they probably add about 60 million of devices into this with Ignite platform. And having said that, there's also patents around Ignite platform and single tap. Single tap is their second product, which is their growth factor moving forward, right? So maybe let me just show you how a single tap works. It's a bit hard to explain here. Sorry, let me see. So I mean, as you can see this YouTube video, right? Basically, it moves on. You go to this BCC page, BBC page, right? And then you see this advertisement slot here. You click on it. There's an instant download, right? So you click on the download and you bypass all the Play stores and stuff like that. You get installed, and then yep, it's being installed. So I would say that is the how single tap works, right? So you bypass the Play Store, and the reason why advertiser likes this, because if you bypass the Play Store, there's less friction in installing, because when you need to get the Play Store, there's actually a few more buttons they need to press. If you're playing, imagine if you're playing a game and you saw an ad that you want to install, you may click on it and then you just install it, right? And then after that you can continue with your game in a very fast way, right? This is especially important, I think, to gamers. You don't want to lose the momentum, right? So that's something that I think is really the next growth, and especially you read all the earnings transcript, and the CEO has been emphasizing single tap for some time now, and I believe it's coming on board, right? The revenue will just keep coming, right? So for now, Ignite platform has probably becomes Ignite platform is what they deem as the one-time earning revenue, right? And if single tap is going to be the recurring revenue in that sense. So if you go back to my old videos, you will see more about, you will read more about them, see more about Ignite platforms. So maybe let me go to the competition. I think there's a few competition in the sense. Iron Source, which is within Unity now, is being acquired by Unity, and they do have a product that is very, very similar to Ignite platform, right? It's called Aura. But when it's now under Unity, I got a feeling Aura will not be a focus right now, and it's something that I'm actually very happy about, right? Because to be honest, I think Ignite platform is the main platform out there, that actually has this so-called the preload function, preload ads function into it when you first activate your handphone, right? I mean, some people don't like preload, but having said that, right, I've been an Android user for a long time. I always have preload, so I'm fine with it. As for if Iron Source no longer, I mean, if Aura is no longer an important, I would say an important product under Unity. So what's going to happen here? There's actually another sort of like similar kind of preload business out there. For example, last time Facebook in themselves is doing this preload directly, signing contracts directly with OEMs, right? That's what I found from transcript. So that's what I heard about as well. So that was another competition is the apps themselves, right? But having said that, I don't think a lot of them is actually doing this right now. And so having said that, I think ISO is no longer a huge threat. It was one previously, but now no. So I'll look at AppLovin, right? AppLovin is a company that actually tried to sell itself to Unity when Unity tried to buy Iron Source. I would say it was a very interesting period at a point in time. But that being said, the combined entity was deemed as, I mean, I'm not sure how much the combined entity, but they just tried to sell it. So to me, it seems to me to say that AppLovin is trying to, I mean, they could, if they believe that they could become bigger, right? Why not just do it by themselves, right? Why try to sell themselves and combine with another big entity? So for me, I feel that that to me actually lose some of the trust if I'm an investor in AppLovin. But having said that, I've actually seen their recent thank you, and it's quite interesting. Let me see. So this is AppLovin's thank you. The interesting thing is that so maybe let me go through it. So they actually have this thing called they actually have this credit facility with their related party, which is I would say with their related party, right? And if you look at their facility, right, credit facility, they're actually paying quite a lot of interest on the facility itself. I would say, yeah. Sorry, give me a while. Okay, they're actually paying about their interest expense is about 117 million. That itself to me is actually a bit of a red flag in myself. So I'm maybe this 1,770 million is not totally paid to their related entity, but to me, that factor to me itself is that means part of it is given to them, and it's actually not a very I think it's floating plus 3%, something like that. I mean in their 10Q, right? So that to me is a bit of a red flag. I don't really like that. Moving, let's also take a look at their I mean, if you look at their long term, that they people are actually I would say saying that there's too much debt in Digital Turbine's balance sheet. But when I look at AppLovin's balance sheet as well, they too has about 3 billion worth of debt. I mean, and when you look at how they try to pay off the debt, right? Maybe it's about 17 million so-called for this year, which is a bit low in my opinion. Yep, and with that, right, their free cash flow is really hurt because they did a lot of acquisition the last 2 years. So I'm not here criticizing the company itself, but I mean as a comparative to Digital Turbine, I definitely prefer their financials more in that aspect, especially they do have free cash flow and they're profitable and they are heavily paying down their huge so-called huge debt amount, right? And do know that AppLovin has the business of their own income as let me see. Yep, they have their own apps revenue as well. That means they actually it's not solely as a platform to assist other applications, but they also have their own games app revenue. It's quite significant. But that itself is lower margin. If I'm not wrong, it's much lower. My EBITDA is, you see, the ads revenue is about 1.3 billion here, but the EBITDA is only 180 million. Whereas their software platform is one which I think they should focus on, which actually has about 740 millions of revenue, but they actually generated about 600 over 600 over million worth of EBITDA itself. So if I'm developing, I will focus more on the software platform rather than developing their own apps. So with that, let's get back to the slides. So so on the last one, I'm looking at the trade desk, right? So with that, I mean the trade desk is one of the best DSP out there, right? And there's no competition, right? So why am I talking about it, right? So as usual, let's look at the next. Okay, there's this tweet out here by Prime to Print. Prime to Print, sorry. So it's actually comparing apps and the trade desk. If you look at here, right, actually, I mean, if you solely look at them, the trade desk has twice the revenue of apps, but if you look here, right, their earnings per share is actually lower, right? And if I'm not wrong, if you scroll down, if you scroll on his the trade desk, so higher revenue, lower diluted earnings per share, right? So that itself is, I wouldn't say that the trade desk is not good, but if you compare their market cap, right, the difference is too much, right? I mean, it's not 1.9, but it's just too much difference for. So I would personally think the apps should relatively when compared to the trade desk, it should have a higher market cap. And there's also another tweet about the trade desk having a lot of stock-based compensation. I mean, if you go and look at their cash flow, you will see that. And there are people saying that Digital Turbine similarly has a high stock-based compensation, but you must understand that Digital Turbine has made acquisition last year, and there's a need to give. There's a lot of new units, new shares being allocated out, and it's important to keep their employees happy as well. So there's this share-based compensation that is not significant actually when compared to the trade desk itself. So I'll also explain a bit more on the employee side when we look at the transcript as well, and maybe my understanding of the previous transcript itself, right? So let's move on. So now let's go through the latest earning call, the latest thank you, and the ratios. Simon, let's go back to this. Yeah, this is what so this is what I thought about a loving deal self and then the unity deal. Okay, so maybe let's do the transcript first, right? So I've highlighted a few pointers I just want to highlight to you guys. Okay, so on devices, right? Ignite platform is significantly based on devices. So there is a slowdown in terms of devices in US, but that is seen as temporary. So if you can finally, if you see here, right, there's this other pointer where I think it's very important that we take note of it. That many global operators and OEMs are trying to grow their revenue. Means because moving forward, there's this recession, so-called macro environment, bad macro environment. So if people want to grow their revenue, it's a tailwind for Digital Turbine because they work with them directly, right? So that's one of the pointers that I like to point out. So as we move on, yeah, as for employee, they're reorientating their headcounts towards future products versus legacy, meaning focusing more on single tap and demand side platforms for advertising, right? On their employee as well, right? You'll see later that each employee is actually contributing about 200,000, which is significantly better, much better than their competitors. On another point, in their last earnings call, if I'm not wrong, right, they are actually focused not actually hiring significantly, but there's actually a period where most of their most of their employees will need to, do more than one role in a sense, right? To build because they acquired too fast and their employees have to do more in that sense. And that actually contributed to a glass door decrease in the happiness of the employees, right? So some I seen negativity around this pointer. Oh, Glassdoor employees are unhappy and stuff like that. But the main thing right now is that I mean, if I'm the employee, I'm probably unhappy as well. But if my company is growing and is doing the right thing, I mean, I'll stay, right? I mean, even with the stock-based compensation, I know eventually what I'm getting now is probably worth much more in the future, right? So that's the thing about the employees. And then as I said here, they've actually added 75 million this quarter, which compared to 68 million last June. They didn't put a total devices here, but I'm sure it's about 800 more than 850, if I'm not wrong, going to 1 billion in 1 or 2 more quarters away. So RPD per US in the US is actually $5 per device, and it's up 15% year on year. On international, that is worse off. Last time was 40 cents per device, right? So now I will see that that should still be less than $1 or less than 50 cents in that sense. But they didn't mention anything here, so let's move on. I think this is the main thing where they actually have a high profile relationship with Google, a new tier 1 gaming publisher, and also a large e-commerce provider with a growing advertising business. So the thing about Google is that there are a lot of FUD around Google in that sense. People are always saying, Google can take over Digital Turbine, or come up with a similar product, but Google cannot. I have said a lot of time, I've written a lot of time that is impossible. The possibility is it's not impossible, but possibility is very, very small. And Google, actually, if Google actually do that, right, there will be antitrust issue coming up, definitely. So they need Digital Turbine itself to be a facilitator of the apps itself, so that more people will build apps. It will create a very vibrant economy for Google itself, definitely, right? And if you think about it, right, and if you look into past, there was some press release that they are actually working directly with Google, and that is important, right? And Google's actually their staff actually even commented on the press release, meaning that this relationship is healthy, is positive, right? And right now they have actually expanded this relationship with Google, where their single tap product is licensed in the Google Cloud market. That is very significant, right? And here, one of the thing here is the very large e-commerce provider with a large growing advertising business that some people say is Amazon. I also think so. I hope so. But having said that, since there's no confirmation, I'll just think that these are various interesting tailwind for this company that will come very, very soon, because they are going to launch during this quarter, right? Having said that, do note that single tap product is something that requires time to build up, right? It doesn't mean that, I launched this quarter and I'll have a lot of suddenly a lot of cash revenue coming in, right? That's not going to happen. Single tap requires build up. Okay, so but I will see that I think that in 2 or 3 quarters time, we will see a significant growth in the revenue itself. So moving on, yeah, there's also this content strategy, content media, where basically it's just, I think, the news upload in the app and stuff like that, where after that in the news there'll be apps, right? It's something like you saw on the YouTube video just now I showed. So there's actually a shift from prepaid to postpaid. Do know that this revenue is about 10%, it's less than 10% of their revenue right now, and there's some headwind against it since they are shifting from prepaid to postpaid for their partners, right? So they have Verizon on it. They're also expanding AT&T. Yeah. So that's I mean, I think right now they actually lost T-Mobile in as a partner, but I won't take that too much into concern. So moving on, let's see what else do we have here. So they actually talk about being the Shopify for app stores or on devices, and they actually make a strategic equity position in this app store. Okay. Okay. So so anyway, with that, right, I was actually quite concerned when they actually did this. I was wondering whether Google will take it negatively. But if you think about it, right, when Digital Turbine is working with Google Cloud itself, right, and they're expanding this relationship outside with other app store, right, meaning that eventually Google Cloud will have some sort of additional revenue on other app store, which they didn't have previously, right? I mean, an indirect source of revenue. And that, in my opinion, is significant for Google as well. So this is actually, after thinking it through, I think this is a positive thing for Digital Turbine, and moving forward, it will be positive for Google as well. So yeah, they are eventually they are launching this integrated effort with a US operator as well in early 2023. And yeah, so each employee is now contributing 20,000 of EBITDA here, and their take count actually went lower, which is actually very significant in the current market itself, right? So they have a new CTO joining from Meta, which I will also talk about in a while later. Let's see what else do we have here. So higher gross margin, and there's a part where I think is quite significant. Yeah. So there was some I mean the CEOs, I think the CEO, yeah, the CEO Bill Stone actually said at some point, we want to manage expectations. So apparently the whole earning cost was very good, but having said that, Bill Stone wants to play it down because there were times where when the market was too into what they were the tailwinds of digital buy, and it didn't come through within the next quarter. It actually requires some time to build up. So that is the issue, a bit of the issue from digital turbine products. It doesn't come immediately. It takes time to build up. So if you're investing, right, I think that's fine if you're a long-term investor. So I'm a long-term investor, that's fine as well. And do know that Samsung is a major contributor to their Ignite platform, right? Samsung, they are a great partner. Samsung is a huge partner for them. So I've saw Samsung's name a few times in earnings transcript over the years. So yeah. Okay, so and then if you see here, right, they also say that about 70-80% of free cash flow will be paid down. So we can also take a look at the free cash flow amount later as well. Yep, and some integration with SingleTap with their previous fiber, which is one of their acquired entity. So this is definitely their soft launch it only. So imagine if they actually really launch it, right? That will be significant as well. Yeah, so that is all for the Digital Turbine transcript. Let's look at their financials. Okay, if you see here, there's about 447 million. Let's make it bigger. All right, 447 million of debt. This is what is actually put a lot of people down, and then they are saying that, oh, they're very bad they're very bad, I would say, balance sheet in that sense, right? Digital turbine, a lot of people are being put off by digital turbine balance sheet, but please read one of my articles, the one that in Seeking Alpha, right? I actually say that they are a great capital allocation machine, right? If you read through, you will probably understand that their net cash cycle is very low, right? If that sense, right, they actually they have cash first, before they have cash and hold it for a while before they need to pay out. So their net cash cycle is very low, and that's why their balance sheet looks that bad, but it's actually a very good thing for them, right? That is why for Digital Turbine itself, I would rather focus on their profitability, which they have turned profitable. In last year, a lot of people are also saying that they're making losses, but that is not true. These are just changes in their fair value contingency consideration. And this year, if you look at, they are net cash over 6 months, so it's 64 million, right? I mean, think about it. If it's one whole year, it will be 120 million itself. And 80%, I mean, if you think about 70% of it is probably 7%. Okay, my maths probably fail right now. It's about 120 minus 30 minus 40. About 80 million to pay down the debt. So let's scroll down to how much they paid off. So yes, over 6 months, they already paid off 86 million worth of debt, right? If you compare to Loving just now, which is only, I think, about less than 20 million, right? And then if you look at, they are not intending to acquire any more business, so their free cash flow is significant at this point over the next 1 year, right? And if you look at this cash flow and you want to compare it to their, I would say, their market cap, it's just not right? So I just want to say it right now, I am still holding on to this. Let's just go down. I think it's important that we also look at, no, what happened? So facility. Let's look at their revolving facility. It's important that everyone understand how their interest rate is actually very low. Okay, I can't find it here. I think it's probably 3 or 4% right now. But if you look at their interest rate, right, they are actually only paying about 9 million against a 500 million worth of interest. 9 million worth of interest expense against a 500 million of debt. But it's not that significant, to be honest. So don't be fooled by its balance sheet. Okay, so now let's go back to the slides. Okay, so I just want to give a highlight of what the catalyst and the risk itself. So operators and OEMs are looking for new revenue stream. They will work with Digital Turbine, or at least Digital Turbine will work with them. Okay, potential renewal of contracts, right? When this operators OEM renew their contract, right? Digital Turbine tends to try to get more out of it, right? So when the revenue, so at the start maybe it's a 60% to 40% kind of like revenue sharing kind of scheme, but as they renew this contract, your Digital Turbine tends to get a higher percentage to it. It has been the same for the last few years. When renewal comes, right? Yep, so that's something that's happening. That's why their gross margin has increased this year. As you can see, an earning transfer 70-80% of the free cash flow will also be paid. That is deemed as about 70 or 80 million if it continues to have that kind of free cash flow. Google partnership, Amazon, and a tier one game publisher, that is significant. Okay, I put question mark against Amazon because I don't know if Amazon is going to be that particular partner, but it looks like it is. And then potential return of the content media. So there will be more revenue integrated effort from News Hub business. There was actually 1 year ago, there was this interview where they said, oh, they're integrating single tag with Meta, and that was a big push factor. And it takes a bit of a time right now that things haven't really fulfilled. So and we all know there's this new CTO from Meta. So I got a feeling this will push that integration forward. Okay, that's just my opinion itself. But there are also risks, right? So temporary risk, slowdown in devices sales, which I think next year smartphone will slow down. Slower international growth as well. In fact, the global macro environment could slow the whole growth itself. Stretch balance sheet that people are concerned with. But I would hope everyone will take a deeper look. And yes, if you read my article, it's probably not such an important factor. And the inability and time taken to execute, right? So the inability, this is the main reason, okay? If Digital Turbine cannot execute, that is one of the main reasons. And sometimes they will take a longer time than expected to execute their strategy or certain integration, right? So this is what's happening over the last few quarters that I've seen. I'm not sure why. It could be not enough employees. It could be integration. You take some time because there's coding, there's UAT testing and stuff like that. And you're integrating into other people platform to ensure that they also run smoothly and their end customers, advertisers will be happy and they can get the result. The advertiser can get the result there. So there are a lot of parties involved in this process and this take time, right? So I can only say that many are put off by this. Many investors seems to be put off by this because when Digital Turbine announced something, right, the revenue doesn't come in as fast as it was expected, right? But I just want to emphasize that this take time, and if you are invested, look into the long term, 2 or 3 years at least, right? So on the final risk, which I've talked about, a lot of people say that there's this Google risk. But I really think, as I said previously, this probably won't happen itself. Okay, so finally, for me, before I end this video, right? So what is my conclusion, right? I'll hold on to my core position. I'll buy into the dip and sell excess of around my core position when there's significant sudden optimism, right? And then if I have excess, I'll try to get excess cash to average down from this option play from minimally from option play. I'm still looking at it from 10x, and there's a lot of tailwinds more than headwinds, right? So as I said, I'll hold on as and execution remains the key, right? I'll still add to it, but to be honest, my resources are a bit low right now, so I'm not significantly adding to it. Having said that, I'm still very, very, very positive about Digital Turbine itself, especially after this earning report. But do take note, they need time, right? Everybody needs time now. So with that, this is Top Investing, and I hope you like this video. Please give it a thumbs up, like this video, and then subscribe to me. Okay. Having said, thank you, and I see you in the next video. Bye.